So this week I was invited to be a speaker at an event called Inside the Investor's Mind, where I was supposed to discuss with two other investors about what makes a startup investable. And today I want to share those key points with you. It was an event that was meant both for the people that were building companies and wanted to understand what they need to do in order to be successful in raising money for their companies, and also for the people that wanted to become investors themselves. Besides the people that organized the event, there were three speakers. The first one was the managing partner at the corporate venture fund, so the person who has the final say in all of the decisions made by the investment division of a corporation. The second speaker was the CEO of a company that works as a tech partner for a lot of companies, so they are helping develop all of the tech aspects of a business. The third speaker was me, from the position of an angel investor, someone who builds products, and also someone that creates content about investing. Before we get into the points discussed at the event, I actually want to share with you how I got to be invited as a speaker. Together with the two other speakers from the event, we are all part of the same angel investors group, which is also organized by the people that hosted the event. Around 2 or 3 months ago, I was also invited to be a guest on a podcast about investing in Romania, where the other two speakers were invited as well, along with someone from the management team that organized this event. They surely must have seen that podcast where I discussed about my current achievements and then also my content that I've been putting on LinkedIn about my journey so far, and that helped them decide that I'm a good fit for this event. When I've talked with the organizers after the event, they also mentioned that it was nice to have the contrast between the two people that had a big company behind them and also me, who I've been doing it mostly on my own since the beginning. The first question that was asked was what made me start investing in startups and why do I continue to do so? When I first started looking into angel investing, I was inspired by other creators who were talking about adding angel investments as part of their portfolio. Once I started to look more into it, I quickly realized that the biggest deals and the real money is made in the private sector. And I knew that if I wanted to have the huge advantage that this could provide and get ahead, I would have to join this party. I was extremely lucky with the timing because at the same time that I started to look into this topic, there were also other companies that wanted to make this asset class more accessible. That's the moment when crowd investing became a real thing. Before that, you had to have millions of dollars in order to be able to invest into private companies. The way crowd investing solved that problem was that they pulled together a lot of investors into a single group that would invest into the same company, which covered the minimum requirements. They managed to break down the ticket sizes from hundreds of thousands of dollars to just $2.5K at that point, and I believe now it's even down to like $100. Crowd investing is what helped me get started, and then eventually I managed to scale out, and I continue to invest to this day because I like the thrill of it. Not the thrill of risking your money like in gambling, it's the thrill of getting to be a part of the company and getting to share the joys and the losses with them and be able to be a part of their journey. I've also asked in how many deals did we invest in. For me it was 34 investments into either startups or scale-ups in various verticals, mostly centered around hardware. But it was without my intention to do so. It just happened that over time, the best companies that I've seen were producing something that had a hardware component to it. The third question was what are we looking for in a startup? And for me, it was impact and resilience. When I mention impact, it means that I'm not looking for a product that can increase productivity by 10%. I'm looking for something that can change an industry. And when I mention resilience, I'm referring to the fact that the founders need to be able to adapt to any circumstance, no matter how hard it gets. As a founder, you need to be able to make sacrifices and take on big risks in order to ensure that you can hack your way to success. And I can tell you for sure that most investors will agree that the most important aspect in a startup is the team. We were then asked what's an effective way of finding startups, and for me it's networking, either being part of angel groups, platforms, or networking through social media. Ever since I started posting content about my journey, I've started to receive a lot of DMs from interesting founders that were looking for an investment, and it has even led to some amazing deals. For this question, we were asked to briefly describe how our investment decision process looks like. The main point of the question in this case was to also determine if it was an exact checklist or if it also contained a gut feeling. I remember that all of us mentioned that it's mostly a combination between the two. For example, in my case, I have a high-level checklist that I'm going through, but I also rely on my gut feeling to determine if something has red flags or if it doesn't align with my values. For early stage companies, you may not have enough data in order to actually go only based on the numbers. And in order to determine if a founder is able to be resilient, you also have to have a gut feeling for it. The next set of questions was focused on our most recent investment. What is it? Why did we invest? And also, how are they doing since the investment? I forgot to mention that the event was focused more on tech products, but in my case, my latest investment was not a tech one. Recently, I've been very interested into the creator economy, so either products for creators or by creators. And my most recent investment is into one such product in the camping niche. Actually, it's more than just one product. They have both recurrent products and also big ticket items. The reason why I invested was because it was a strategic decision in order to get more involved into the creator economy. Besides that, they also had a lot of reservations on a Kickstarter campaign, and also they wanted to get more creators involved, so it's not just investing into one creator. In relation to how they are doing post-investment, there are not too many updates because it just happened last month. But I know that their Kickstarter campaign was extremely successful. What makes us break away from a deal even if all of the boxes are checked? Bad communication, any public image risk, and also speaking badly about the market, your employees, or even competitors. Those are red flags for me, and they speak loudly about the personality of a founder and how the company will go. How does market timing and industry trends affect an investment decision? I personally want to stay away from overhyped trends that are currently happening, and instead I want to find them before they are mainstream. That's one of the reasons why I'm currently interested in the creator economy, and also I'm trying to look into space related stuff. For the next point, we were asked to give examples of business plan mistakes that raise concerns. I mentioned a lack of focus on the customer avatar, so trying to make something for everyone usually doesn't go too well. A lot of development without market validation, so trying to build something for 2 years without even knowing if it's something that customers actually want. They also mentioned issues with monetization, like trying to compete on price. So for example, trying to sell your product cheaper than your competitors. That's usually not a good business plan. We've also had a question related to how does communication affect the investment decision. And I said that it's extremely important, and it's even more important after the investment. It's extremely important if you're trying to raise multiple rounds that your past investors are on board for future rounds. A past lead investor no longer contributing to a new round can be seen as a red flag by new investors, because it shows that the past investor may have lost faith into the company. How does the future look like for our investment plan? Any concerns or milestones that we are trying to achieve? I want to be as resilient as the founders in which I'm investing, and I tend to be very optimistic about the future. I personally believe that the market will turn a bit into 2025, so we can expect more IPOs and also mergers and acquisitions. With that in mind, or even if it doesn't happen, I still believe in this path long term, and I want to double down on my journey. That means that I'm looking to get to 50 startups that I've invested in as soon as possible, maybe with even higher deals, and I also want to get more involved into the ecosystem overall. I believe this can be a huge opportunity for anyone that wants to get ahead by taking on some risk. Which industries do we believe to have the most potential in the future? I already mentioned the creator economy. I also believe into the customer success and customer retention tools will get a lot more attention in the near future, and also the gaming sector. I've also mentioned that I'm looking into space companies. I believe they also have a huge potential, but it may be a bit too early to get into those. But we'll see over time. After the main points, there was also a Q&A section, and there were some interesting questions in there that I want to touch on. First one was, when is a company no longer a startup? And the answer was when it stops growing exponentially, so when the growth slows down. Second question, which for me was even more important, was how much money do you need in order to start investing into companies? I've already mentioned that crowd investing is trying to lower the amounts required to get started. And in my case personally, I started with only $5,000. I believe that in order to actually get started, you don't need any money upfront at all, because the first thing that you need is to start learning, and you can earn the money along the way. In the beginning, I believe I spent around 3 to 6 months just learning everything that I could about this topic, and only then I actually committed any money. Start learning if it's something that's of interest to you. I'm sure you won't regret it. Thank you for watching this video right until the end. Leave a like if you've enjoyed it, let me know in the comments what you found the most useful, and subscribe if you haven't already. And if you're interested to learn much more about investing, check out other videos on my channel, or the ones that should appear on the screen right now, which YouTube believes are the most relevant for you.